Hello students, in this session let us start with the next chapter, assessment of individuals. In this chapter you have to calculate the total income of an individual and tax liability of that individual. To calculate total income, you have to calculate income from various heads of incomes. They are income from salary, income from house property, income from business or a profession, capital gains and income from other sources. After calculating that, you have to calculate tax liability of an individual by using the present tax slab, that is for the assessment year. See the steps for calculation of total income and tax liability. So these are the steps to calculate the total income and tax liability. First step is aggregation of various heads of income and consider income under section 60 to 65. That 60 to 65 is relating to clubbing of income. First, you have to calculate income from various heads of income and clubbing of income. Clubbing of income means an individual paying tax on the income earned by other person along with his income. This clubbing of income you already learned in the previous chapter, that you have to recall here. Next step is calculating gross total income with the provisions of set off and carry forward of losses. After calculating the income from various heads, you have to calculate gross total income by adding that income from various heads. Here you have to use the provision of set off and carry forward of losses. That is set off of loss of one head within that head or from other heads and carry forward of losses to the next year. Next step is if gross total income is positive, allowing deductions from section 80C to 80U, balance is total income. After calculating gross total income, you have to deduct general deduction under section 80, that is from 80C to 80U. The balance that you get, that is gross total income minus deduction under section 80, that balance is known as total income. On that total income, you have to calculate the tax liability of an individual by using the percentage of tax. Here, you have to use the percentage given in the tax slab except these items. See first one, in winning from lotteries, card games, races including horse race taxable at 30%. If the income of an individual includes this item, that is taxable at the rate of 30%. That is the fixed rate 30%. You have to use this rate to calculate tax liability on the income of these item. Remember this point. Next one, short-term capital gain taxable at 15%. Short-term capital gain has to be taxed at 15%, that is a fixed rate to calculate short-term capital gain. Next, long-term capital gain except transfer of securities taxable at 20% and on balance according to tax slab which is applicable in the respective assessment year. So, you have to calculate tax liability on these three items on this prescribed rate, and on balance you have to use tax rates given in the tax slab for the present assessment year. This tax slab may vary from year to year. That changes you have to note while calculating the tax liability. So this is the tax slab for the assessment year 2020-21. Under this tax slab, the rates of tax can be classified into two categories. First one is general rates and second one is special rates. This special rates is relating to short-term capital, gain, long-term capital gain, winning from lotteries, card games, etc. And this general rates is relating to total income excluding this short-term capital gain specified in section 111A at the rate of 15%, long-term capital gains, winning from lotteries, crossword puzzles, races, etc. So, general rates does not include these things. The tax slab in India can be classified into three types, that is tax slab of a super senior citizen, tax slab of senior citizen and tax slab of general category. Super senior citizen is a person aged 80 or above 80. Senior citizen is a person aged between 60 to 80 and general category is relating to below 60 years. Okay. So, that is the three groups: super senior citizen and general category. The rate of taxes given in the last column. In case of general category, up to 2,50,000 the income is exempted from tax. Remember this point. In general category, up to 2,50,000 is exempted. In case of senior citizen, that is aged between 60 to 80 years, up to 3 lakhs is exempted from tax. And in case of super senior citizen, their income up to 5 lakhs is exempted from tax. You have to remember these 3 points: general category up to 2,50,000 exempted, senior citizens up to 3 lakhs exempted, and super senior citizens up to 5 lakhs exempted from tax. Next, see, on next rupees 2 lakhs, that is in case of senior citizens aged between 60 to 80 years, above 3 lakhs and below 5 lakhs, that is next 2 lakhs means up to 5 lakhs but above 3 lakhs, taxable at the rate of 5%. That is 3 lakhs to 5 lakhs taxable at the rate of 5%, and in case of general category 2,50,000 to 5 lakhs, that is above 2,50,000 and below 5 lakhs, taxable at the rate of 5%. Here in general category, see, from 2,50,000 up to 2,50,000 exempted, from 2,50,000 to 5 lakhs taxable at the rate of 5%. And next 5 lakhs, next see, next row, next of rupees 5 lakhs, in case of super senior citizen exempted from tax because their income is exempted from tax up to 5 lakhs rupees, and in case of a senior citizen aged between 60 to 80 years, 5 lakhs rupees, that is 5 lakhs to 10 lakhs taxable at the rate of 20%. If their income is above 5 lakhs and below 10 lakhs, that is taxable at the rate of 20%. And in case of general category, that is below 60 years, 5 lakhs to 10 lakhs taxable at the rate of 20%. It is same for senior citizens and general category, that is 5 lakhs to 10 lakhs taxable at the rate of 20%. And on balance, that is above 10 lakhs taxable at the rate of 30%. That is applicable for 3 categories, that is super senior citizens and general category. If their income exceeds 10 lakhs, that income is taxable at the rate of 30%. So, this is the tax slab of the year 2020-21. Go through this slab once again. It is very important to calculate tax liability of an individual. Next, see special rates. First, we studied about general rates, that is general for all income except these items. So, for these items, special rates are applicable. See, on specified incomes, the tax is charged at a specified flat rate. On excluding short-term capital gains specified in section 111A. That is, on short-term capital gains taxable at the rate of 15%. That short-term capital gain must be specified under section 111A, that is short-term capital gain from securities taxable at 15%. Next, see, on long-term capital gains at 20% and on gains from listed shares without indexing the cost of acquisition at the rate of 10%. On gains from listed shares without indexing the cost of acquisition, the rate is 10%, and on long term capital gains under section 1112A at the rate of 10%. On winning from lotteries, crossword puzzles, races, etc. at 30%. Remember, if they give any information or any income relating to these categories, you have to apply these tax rates. So, carefully mention these points. Except these income, for all other incomes, you have to apply the general rates of tax for calculation of tax liability. After this, after calculating the tax liability on the basis of the rates prescribed in the tax slab, you have to deduct rebate of income tax from their tax. That is, you have to deduct this rebate of income tax from their total income if the total income does not exceed 5 lakhs rupees. Here, you can deduct this rebate of income tax only if their income is below 5 lakhs rupees. So, rebate is mentioned under section 87A of Indian Income Tax Act. As per this section, if the total income does not exceed 5 lakhs rupees, a rebate of 12,500 is available on the tax payable before cess. Remember this point, 12,500. If their income, that is total income, does not exceed rupees 5 lakhs, available on the tax payable before cess. Before applying this cess or before deducting this cess, you have to deduct this rebate of rupees 12,500. This is applicable only on total income below 5 lakhs rupees. That is rebate on income tax, 12,500. Remember this amount. This has changed this year. In the previous year, the rebate amount was different. You already studied in the last year. In this year, that has changed to 12,500. So, note down this point. Next, surcharge. In the previous year, you already learned these things, but surcharge also changed in this year. See, 10% of surcharge. Here, surcharge means tax on tax. This is the extra tax payable by an individual if their income crosses certain limits. So, in case of income, total income exceeding 50 lakhs, surcharge is chargeable at the rate of 10%. If the total income exceeds 50 lakhs, surcharge is 10%. If the total income is in between 1 crore and 2 crores, that is, if the income exceeds 1 crores but not exceeding 2 crores, the surcharge is payable at the rate of 15%. And if the total income exceeds 2 crores and it is not exceeding 5 crores, the surcharge is 25%. Remember, if the total income exceeds 50 lakhs, 10% extra tax have to pay by the individual. If the total income is in between 1 crore and 2 crores, 15% they have to pay extra as surcharge, and if their income is in between 2 crores and 5 crores, they have to pay 25% extra tax, and if their total income exceeds 5 crores, they have to pay 37% surcharge. In the previous year, there was only two categories, that is between above 5 lakhs and above 50 lakhs and above 1 crores. But in this year there are 4 categories. Remember this point also. Carefully note down these points. Next, health and education cess. After calculating the total income, that is after adding surcharge and deducting rebate, you have to calculate health and education cess on the total income calculated. That you have to add this health and education cess to the tax liability of an individual. That is, they have to pay 4% extra as health and education cess. That is 4%. That is the same in this year also, 4%. You have to pay as health and education cess. In brief, you can calculate the tax liability as follows. That is, income tax on total income at the prescribed rate. After calculating this, you have to add surcharge if any. That is, if their income after applying this prescribed rate exceeds 50 lakhs, you have to add surcharge, and you have to add health and education cess at 4%. After adding this, the amount you get, that is known as tax payable by an individual. So this is about tax slab and income tax calculation for this assessment year. In the next session onwards, let us start with the calculation of total income and tax liability of an individual. That is, directly let us go with our problems. Thank you. Let us meet in the next session.